Hey, it's Patty Sharp, CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. Today we're going to go over how to read financial statements. This is an example. I've already kind of talked about what the different financial statements are in another series of videos that I've done. You can check out links down below if you're not familiar, but we're going to be covering the balance sheet, the income statement, and the statement of cash flows. And as we go through them, I'm going to show you kind of what I'm looking for, what things might be red flags, and what key metrics you should be checking out as you're going through the financial statements. So let's get started with the balance sheet. Okay, so the balance sheet is a listing of everything that you own or owe. You've got your assets at the top, you've got your liabilities at the bottom, and then you've got equity under that. Equity is basically the value of your company. You take your assets, you subtract out your liabilities, and you are left with what the company is worth. Now, this is what it's worth on a cost basis. It's not the same as maybe you could get out in the free market, but it can give you kind of a sense of whether your company has value or not. Okay, so when you're looking at this, you're going to be checking out the first thing I would do when you're checking out the balance sheet is to make sure that the numbers make sense, okay? So when I look at the balance that's in the checking account, I want to make sure it matches against the reconciliation I did against the actual bank. If you want to know how to do that, you can check out this video here. I'm going to take a look at accounts receivable. I will pull up an aged receivable just to kind of take a look. See, the number here is 2985 and the number here is 2985. This tells you exactly what's on the balance sheet. And if there's something on here that you don't think you're going to be able to collect, you need to write that sucker off, because otherwise this number really doesn't represent the truth, and you always want your numbers to represent the truth. Okay, so you're just going to go through and see if there's a way to verify each and every number. Now, as I'm looking at this, I'm kind of raising my eyebrow at the computer equipment number because it's a big old negative number and you can't have negative computer equipment. So I would just open up the detail of this, hold down Control, click on it, it'll open a new tab for you, and it gives you the details of what that is. It looks like there was a journal entry that was recorded. I would argue that this number isn't right because it's taking out more than it's supposed to. So I would definitely look into that and fix it if you can, okay? And then just go through all of these. The other thing that I would raise an eyebrow to is historical adjustment. There really shouldn't be any historical adjustments if you're keeping up with your books and things are nice and clean. In this case, I took a look and it showed up when they converted the file from a different software type to here. They didn't know what it related to, and they just booked it here. I would say that needs to come off as well. Maybe at the end of the year, maybe at the end of the month, whatever makes sense for your business. But if you can't identify it, you might need to amend a prior year tax return or whatever. So that's something else that I would kind of take a look at. But the rest of it, if it looks good, then here are the things that you should pay attention to when you're looking at your balance sheet. The first thing is your equity. You want to make sure that the value of your business is growing over time. And the way that that happens is by checking out the trend of the equity. So if you're looking at it, you're like 4,000, 4,200, 5,200. Yay, it's going up. That's a nice oh no, that's not good. Okay, now it's tanking. You're going to want to check out, okay, what happened in the last couple of months that made your current year earnings balance plummet. So your year to date in July was a net loss of 4,800. Your net loss in August is almost 13,000. Like, something's going on here. We'll go take a look at the income statement in a minute and see what's going on with that. But the fact that this is going down should tell you as a business owner that something might be wrong that you might need to fix as the business owner, okay? The other thing you want to take a look at, super important, anything that is a current asset. So your bank balance plus any current assets like accounts receivable, anything that you're collecting within the next year, you want to make sure, you want to take the total of that, so about what, $4,500, $4,600 roughly, and compare that to your current liabilities, which is $17,500. You have about $4,500 to cover about $17,500 worth of expenses, liabilities over the next year. That should be concerning to you as a business owner. You really want that ratio to be at least 1-to-1. Better yet, if you can make it 2-to-1. All right, because this tells me that you're probably going to run out of cash before these liabilities come due. So that should concern you as well. By the way, the current assets divided by current liabilities is called the current ratio. So if people talk about that now, you know what that is. Okay, so now let's hop on over to the income statement. The income statement is a whole bunch of basic math. You've got your sales that come in, you subtract out the cost of your goods sold, you subtract out all your other expenses. What's left over is your profit. So when they talk about the top line, they're talking about the sales that you made. If they're talking about the bottom line, they're talking about your net profit or net income. Okay. So when you're looking at this, it's going to be a little bit of a gut check. A lot of people, especially e-commerce sellers who are selling on Amazon or Shopify or something, they have a sense of what the sales should be for the year. And if those don't reflect what your expectations are, you should drill down and find out why not. You might be missing something. Okay. Now the cost of sales, I have a lot of videos about that. Go check out one of these and, it'll point you in the right direction. Okay. That'll take you to your gross profit. And then all the rest is just the expenses of running the business. The stuff that you care about, I'd say the two most important numbers on here when you're looking at the trends is going to be your sales and the trends, just basically how it's going. So it kind of is hobbling around and then it goes up and then it goes down again and then it goes up and up. This increase towards the bottom or towards the most recent months, that's good. You want to see your sales increasing over time, as you might expect. But then you want to make sure that your net income is increasing kind of parallel to your sales. You want both of those numbers kind of going up at the same time. And when you're looking at this, you'll see they don't. Actually, it kind of gets worse at the same time that the top sales are getting better. So you want to look at these numbers and go, okay, why is that? There was a huge increase in advertising, which I would be concerned, maybe this will pay dividends maybe down the road. But, you know, for an increase of what, $2,500 roughly of sales, actually not even, to spend $8,000 in advertising, not a great return on your investment. So you need to tweak that a little bit. Consulting and accounting, okay, it is what it is. You want to make sure, though, that you're getting big bang for your buck on any of these big expenses that you've got. I would also check out anything that looks, oh, and here's the culprit down here. It's the wages and salaries. So you've got like $9,000 now per month in wages, but that's just barely less than what you're actually bringing in sales. And that's what's accounting for this huge loss that you've got going on. So you might need to restructure and figure out how to keep your business profitable. Maybe with this huge advertising and the extra manpower, maybe in September you'll see all of this turn around. But these are things that you want to pay attention to and keep your eye on when you're looking at your financials. But mostly you just want to see, look at the trends, look and see, do the numbers make sense? If you see a particularly big number and it doesn't feel right, I don't remember spending $4,500. Control and click, and you can get the details and go, oh yeah, that's right. Okay. Yeah, I know what I was doing. Okay. Makes sense. All right. So let's move on to statement of cash flows. For statement of cash flows, it actually has 3 different sections: operating activities, investing activities, and financing activities. It looks like this company didn't use any financing, so it's not included on there. If you've taken out a loan and you don't see financing activities on your statement of cash flows, that should be a big red flag because you're financing your business somehow. That should be separated out. Okay. The big number that you care about on this report is the operating activities. The net cash flows from operating activities, you're looking at this number here. You want it to be positive. You want positive cash flow. If your business, the regular operations of your business, is not generating enough cash to stay positive, you're going to have some problems down the road, because chances are you are filling in that gap other ways. You're using credit cards, you're using, you take out a loan or something like that, and that can mask the problem that you're having unless you're looking at your statement of cash flows. So when you look at your statement of cash flows, this number really needs to be positive. And if it's important to your business to invest in something like equipment for your business, you want to make sure that this is positive enough, just not only to cover basic operations, but also to cover any additional influxes of cash that you're going to need for investing in equipment for your business to help keep it healthy. So the higher your net cash flows from operating activities, the healthier your business is going to be. If you're just getting started, make sure you check out our e-commerce startup guide. It will give you lots of helpful information about how to avoid some pitfalls and get started with your online retail business. If you like this video, please like, comment, and share. If you haven't already, please subscribe, and I'll catch you later.